Welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm Frank Holland in for Mr. Bob Pisani today. And joining me today, two of the industry's finest. Todd Rosenbluth, Senior Director of ETF and Mutual Fund Research at CFRA, and Jay Jacobs, Head of Research and Strategy at Global X ETFs. So much to touch on today, gentlemen. Let's get right into it. Apple and Microsoft are leading the NASDAQ to record highs, and tech ETFs are following suit. It's kind of like the markets are just forgetting we're really in the middle of a choppy economic recovery, or investors are simply ignoring that fact. We know the hunt for yield is on with bond ETFs seeing huge inflows. Jay, we're going to start off with you. Any ideas on where investors should be putting their money with growth stocks at sky-high levels?
Well, we don't see this coming to an end anytime soon. I mean, if you look at technology, it's one of the two sectors that saw revenue growth during Q2. It's technology and it's healthcare. Both make a ton of sense, though. These are companies that we can't survive without, whether it's video conferencing, whether it's chat functions, whether it's accessing data and being able to do remote work. Cloud computing technologies are at the very center of every part of our daily lives, and they're proving it. They have defensive characteristics in this environment as people realize they can't be fired by consumers or enterprises, and they have growth characteristics as they're growing revenue 20% year over year. So these are very valuable companies that are just really beginning to take off for what we think is a long-term structural trend.
Jay, really quick, we just saw your themes for ETFs during the pandemic. Just explain genomics for us very quickly.
Well, genomics has been at the forefront of COVID-19. It took 2 weeks to sequence the COVID-19 virus versus about 6 months for SARS. So using this really powerful technology, they can figure out what the virus looks like, figure out who has it, and figure out potential treatments. So this is probably one of the most critical segments in all of healthcare right now.
Todd, switching gears over to you. Your thoughts on this. Is tech still a safe place to park your cash?
So we at CFRA continue to recommend an overweight towards the technology sector. It's important to be mindful how top-heavy the sector is. So Apple and Microsoft combined are about 46% of the assets in XLK, the technology sector spider that's tied to the S&P 500, is over 40% in VGT, which is Vanguard's information technology ETF. VGT has some small and mid-cap companies from within. So you have to really like Apple and Microsoft. As we at CFRA do, we have buy and strong buy recommendations on those companies, or you need to make sure you're diversified in either the more thematic-oriented ETFs like Jay was talking about, or your equally weighted ETF like RYT, which is the Invesco equally weighted ETF, has the same amount of exposure to Apple and Microsoft as all the other companies within the S&P 500, which gives you much more diversification. In a normal environment, that diversification would be a positive. In 2020, it's actually been a drag.
You guys switch the eye. So, Jay, we're going to switch over to you. Can you tell us how Global X puts together its model portfolios, and especially now during the pandemic, has that changed at all?
Yeah, absolutely. I mean, our model portfolios run by John Mayer are really looking to capture some of these very powerful disruptive trends that are happening all around us. So we have two different models in the thematic space, one that looks at each sector of the economy and looks at what themes are disrupting them. So if you think about financials being disrupted by fintech, or technology being disrupted by the Internet of Things and the vast growth in that space, or looking at the impact of biotech and how that's changing healthcare, we're really trying to align these themes with the sectors that are kind of the winners of the past, but might not be the winners of the future.
And looking forward, gentlemen, and either one of you can jump in really quick. When we're talking about tech, we have to kind of differentiate between what's work from home, cloud, fill in the blank, whatever, telemedicine, teleeducation, whatever it is. Are one of these sectors safer than the other one right now?
Well, I think if I can, this is Todd to jump in. I think it's important to know that if you're looking at things from a sector standpoint, these companies often will cross over. So Amazon is a consumer discretionary stock. Obviously, Apple and Microsoft we talked about is technology. You've got companies like Facebook and Google that are part of communication services. So if you're looking at sector ETFs, you really want to make sure you know what's inside. Some of these thematic-oriented ETFs will cross sectors. You'll have a mixture of comm services and technology, or comm services and consumer discretionary. So you really want to look under the hood.